Hi, everybody, and welcome to How to Become a Multi. Tonight, we're going to ask, how can you amass millions by the age of 65? And can you do it without any fancy? So what is the maths and what is the method behind getting to a million or maybe even more by that deadline of 65? Our guest speaker is an investor. I'll just share a little with you about him. He is an ordinary Singaporean, but a couple of days ago, he told me how much he invested in the stock market this year to take advantage of the opportunities, in these extraordinary times. I won't say how much. I will tell you that my jaw fell to the floor because there were so many zeros in that figure that, he has at hand to invest in the stock market during COVID. I know he's called the STI the Super Terrible Index, and he prefers S&P 500. So if we have time, I know there are investors watching. I will ask him to talk about investing, and maybe he'll let us into his portfolio as well. But my point in bringing up that story is I think it's important to note that our guest wasn't always a money master. It's something happened in his life to change that part of his life. So my point is, you don't have to be a financial star or an A student all your life to plan for your retirement. In fact, I will let him tell you the story about 1990s.
Okay, hi everybody.
And how to strategically plan for retirement. So let me turn to you now in this webinar. I see Glenn Van Zutphen, my colleague, is on. He wants the millions ASAP. Terrific. You could be anywhere this Friday, but you are here with us. We're so happy. So for those of you who are on, can I ask, please let me know that you are here. It's so useful for me to tailor this session to the level of the audience right now. So send me your messages. Tell me what you hope to get out of tonight. Maybe you can share your retirement goals, or maybe you can let me know what your age is so I know whether it's, young people joining us tonight, also thinking about retirement. Now, it's not for nothing, all this sharing with me, okay? We're going to have prizes for the top questions tonight. So I'm going to share more on that later. I realize I just haven't introduced myself at all. I'm Michelle Martin, and I'm so thrilled to be here with you tonight. In a lot of ways, this webinar is an extension of my daily show, which I'm very proud of because it was a show that I really wanted to create, a place where we could look specifically at investment and personal finance. So I get some wonderful investors to actually come on and let us into their portfolios and into the way that they read markets. So I hope you'll join me from next Monday from 9:05 a.m. So I see a lot of questions coming in. Terrific. Keep them coming through. A lot of people saying that they are looking to invest millions, and if they've started later on in their life and they're 10 to 15 years away from retirement, can they jump on the bandwagon? Glenn, got all your questions. Keep them coming through. They're terrific. Lily, good to see you with us this evening. The rest of you out there, Brandon, hi, thanks for joining us. And Lu Kai Chong, fantastic. You want to know as well whether age is a factor. All right, so I know a little bit more about the audience. Keep them coming through. Again, they're going to help us shape the show. All your questions. We want to personalize it as well, right? So when I spoke with our guest this evening, I told him, I said, please, I know that you've given this presentation many times, but can you make tonight different from any other session you have shared your methodology at? He has agreed, stepped up to the challenge. So especially a brand new shielding part of your, don't give too much away, okay? I call our speaker the CPF Jedi Master, and you're going to see why in just a while. He's 48 years old, he has 3 kids, and he's living life on his own terms, primarily because he's got his retirement figured out. I think it's time to bring him on, really. The man who has the financial freedom to be an entrepreneur and investor. He started his own company. He's headed a unit at Singtel. He's also a mentor to startups. I'm so grateful that he is here with us tonight. Please welcome the founder of 1M65, that's 1 million by 65 or 4 million by 65, Loo Cheng Chuan. How are you this evening?
Good. Thanks, Michelle, and thanks everybody for giving you your precious Friday night with us. I hope that whatever we have tonight will make you feel that, your Friday night is well invested with us.
Yes, absolutely. That is the goal. All right, Mr. Loo, the questions are coming in thick and fast. People want to know, should they invest their CPF money or not touch it? If they're already at age 55, what can they do? But I want to start at the very beginning. Now, some people might think, hey, you were a Singtel executive. Maybe you had a lot of money to start with, and that's how you reached your goal of getting to 1 million together with your wife, I must say, before you both turned 65. So what I hope that you'll be able to share with us is, what do you say to people who wonder if your system can work for people maybe not making large salaries?
Yeah, cool. That's a great question. Maybe I start by sharing a little about my history, okay? So when I was a young first of all, I didn't come from a rich family. Okay, my father was a primary school teacher, and my mother was a homemaker. So I've stayed in HDB throughout my life, and by the way, I still stay in my HDB right now. And we never starved, but I'm not, I never had a car in my life when I was young, and we live simple life. Okay, and I'm happy that we have simple life. We never have extravagance. We never have wealth of a attractive nature. But we have simple life. But somewhere along the line, I've got a slide on this actually. Something happened. After I graduated, I've decided that I'm gonna go and conquer the world. I need to rush onto property. I need to rush onto the stock market. I need to invest. I need to throw everything in, and I work my undergraduate life out, and I'm going to invest as much. So I quickly rushed with my girlfriend them to buy a 4-room HDB flat. And I also invested whatever left over, borrowed quite a lot of money from my dad. His precious money, is some of his retirement money, sadly, okay? And, jibaboom, just, chong into the stock market, chong into the property market. And then something happened in 1997. I don't know whether, Michelle, you look very young, like whether 1997, you know what happened. But
Asian financial crisis, right? The AFC.
That's 10 marks for you, okay? Asia financial crisis. And that really burned me out, So I was just devastated, I lost everything. I was in debt. I was just rescued by my dad, and I tell you that my dad is really a very ordinary Singaporean, and he used his life savings to bail me out. Okay, so then I was lucky. I met a financial guru, and he changed my life. I was up to this day, I'm still grateful to him, and he actually taught me a lot about financial know-how, how to invest, how to build basic foundation, how to form a financial safety net, blah blah blah. And thank God for him. I became a bit smarter, not so stupid, and then life turned around.
Okay, so you had a mentor, and tonight you are our mentor. I think that's fantastic. You're passing it on. A lot of your strategies, Loo, revolve around understanding how much interest our different CPF accounts pay us, and being very strategic about how we move our money into or out of these accounts. Now, a lot of people don't like the idea of their disposable cash going to CPF. They worry about liquidity, right? Is my money going to be locked up when I need it most? So I think it's important to start by asking you, you're not aligned with the CPF board, are you?
Okay, I better make this disclaimer. I don't work for the CPF. I don't work for the government. I have no political ambition. I don't know why some people say Mr. Loo is going to run politics. Tonight I'm on my best behavior because Michelle is the show host, and usually for some of people who have watched my show, I'm usually very Hokkien and very uncomfortable. Some people might find uncomfortable with me. But the truth is that I'm not. I don't represent the government in any way. Some of the things I say, okay, you may not like to hear, but some of the things I say, the government may not like to hear. So I've got a wonderful time, free to talk, whatever I want. Yes.
I start with your presentation, Loo. Does saving $1 million by 65 mean that I have to live a very poor life, a life of deprivation?
Okay, that's a great question, Michelle. First of all, you know, of all the funds, okay, first of all, it is very difficult to grow financially if you don't have anything. Okay, so let's all come to the conclusion that if you decide not to work hard, if you don't save, you've got nothing to start with, then you have nothing. Okay, but most of us, fortunately, most of us work, and most of us have this thing called CPF. And why do I emphasize a lot on CPF? Because number one, it's the most misunderstood, misinterpreted, and I call it a huge pandemic of CPF illiteracy. Okay, but all of us have CPF, and many of us do not know how to harness it well. Okay, and not to forget that the CPF is a wonderful tool to invest, to make use of it. And the bottom line is that you can't use CPF to buy much things. Okay, you can only buy a house with it. Okay, and you maybe invest some in stocks and shares, and maybe some university education for kids and nothing else. So all the kung fu I'm going to teach you or share with everybody, a huge chunk of it, okay, will come from first your CPF. So frankly speaking, investing in CPF doesn't really cost you to have to eat bread and water every day. Don't need to suffer like crazy, that kind of thing. Yes, it does help if you are thrifty and a bit meow on yourself. A bit more hardworking in the early years. But frankly speaking, the use of CPF is very limited. So there's nothing to suffer to some extent. Now, some people say, but I gotta suffer. Wow, piang I stay in HDB, Michelle stay in bungalow, that kind of thing. Wow, my mother-in-law always say, wow, this can't stay HDB, that kind of thing. Guys, it's okay to stay in HDB, right? So with the exception of your property that you may have to humble yourself to stay in HDB, which I do, and this house that you're looking right now is HDB, okay? You can't use your CPF to buy any other thing, frankly speaking. So what suffering are you talking about? Okay, I hope that answered your question, Michelle.
Very well, actually. And we've discussed this. You actually live a very passionate life. You believe, follow your passion and the money will come, right? We've talked about this, actually. Yeah, we'll go more into that in just a while. Lou, I hope you'll take it away. I'm going to turn the stage to you. Please show us the maths and the method to saving millions.
Okay, cool. Right, thank you. I don't know how many people. How many people do we have in Facebook Live right now? I think it's a great thank you for this time. It's a great time that I want to share with everybody tonight. For some of you who have never heard my presentation before, I will be sharing how you make millions with your CPF. For some of you who have heard it before, I'm introducing a few new concepts that I hope will help you along your way to make more money. Okay, so let's go to the next slide. Okay, so I've talked about this for some people who just came in. When I was in my early 20s and mid 20s. I was devastated by the Asia financial crisis. I thought that I studied economics in university. I should know about money management, but the truth is, you can be highly educated and yet don't know how to manage money. Okay, so back in 1997, I was nearly bankrupted by the Asia financial crisis. I threw money into property. I threw money into stock market. I borrowed a lot of money from my father, and I was wiped out by Asia financial crisis. If my recollection was correct, the Asia financial crisis in some sense hit us worse than COVID, in a sense that it hits across the board. Everybody kena jalat. Okay, now COVID, some segments are bad, some segments are worse. We'll touch that later. So next, please. Okay, so I was lucky. I met a financial mentor. He taught me many things. Okay. And the reason why I'm sharing this with you is because I'm indebted to him. Okay, I'm indebted to him that he has shared freely, and therefore I want to take it further to share it with everybody as much as he has shared to me. And I learned the most powerful thing called power compounding. The power compounding works in this way. Now some of you say, oh, to make money, I must find a way to buy, sell at the right time. But Maybe that's one way, but I think a more prudent and wise way is to actually find something that gives you a high rate of return. Right? If you can find something that gives you 4% return, you just put as much money as possible inside regularly, as much as possible, and let it run. The whole curve will go up this way, right? And in every $1 you put in at 4% interest will give you $3.24 in 30 years time. Now, if you can find something that gives you 10% return, which is phenomenal, it'll give you 17 times, okay? So really the magic about money making is not very difficult. It actually is all about find something and whack as much as possible into that instrument as early as possible and sit back and just let it compound, okay? That's all you need to do, right? Simple to understand, not easy to execute. Okay, next, please. Now, I've searched the whole world for interesting financial instrument. I cannot find anything that is safer and better than our CPF. Some of y'all hate the CPF board. I understand. Okay, some of y'all hate the government. I understand. I need to say this, okay? You can hate the government, you can hate the CPF, but you must love their money. If they give you money, you want or don't want, I mind, right? If you give money, you take, right? No, it's stupid, right? So, of course, I found that, wow, CPF got this magic, powerful thing called high interest, okay? Their special account gives you 4% return, So I said, oh, I found this magic formula. So me and my wife, decided that, we're going to throw at an early age as possible, in our late 20s and early 30s, max out our special account and Medisave account. So what we did was that I came up with this formula, right? I came up with this formula, $130,000 a person. We got to work very hard, we got to save a lot, but, we just whack this $130,000 inside. And by the time we reached this, 130,000 was about 30 years old or so. And we sit back and you know what? By the time we reach 65, you will have $1 million. Okay? I need to emphasize again now. I think you all may not get it. My wife and I each put $130,000 inside the special account. So we transfer OA to SA, ordinary account, special account. And from that moment onwards, all the way to the day we retire at 65, I don't need to work anymore. My wife don't need to work anymore. And we will still have $1 million there. Sure, right? So the question is, what if I continue to work? I wouldn't have just 1 million, right? Okay. Next slide, please. So me and my wife right now are 48 years old. Okay. Our CPF balance right now has hit a high of $1.4 million. In fact, we crossed $1 million at 45 years old. So it's 1M45. Why we will do that? Because I told you, right? If you put in $130,000, you don't need to work. But if you continue to work, you get to $1 million much faster. So at 48 years old, we are now at $1.41 million. So so it's very possible to have 1M at 45 to even 50 years old, and when you reach 65 years old, you will be a much bigger number. So maybe I pause here for Michelle, maybe to see anyone have any questions, and before we go to 4M65. Okay, I think Michelle just went disappearing. So maybe I just go on. Are you coming in? Oh yes, Michelle, you're back.
Here.
Welcome. Okay, cool.
All right, okay. We've got a lot of questions coming through. I want to put the first question to you from Ming Zhou. How much did you spend on residential property, and how did you decide on the affordability factor before you decide what kind of flat, how much to spend, in terms of how much to put aside for your retirement? So, can you tell us about how much you spend on residential property?
Okay, so Ming Zhou, you asked a very sophisticated question. The truth is, investment don't need to have such sophistication, okay? So the smartest thing a Singaporean can do, which the government gives it to you, is to get a BTO flat. At that time, my time is not called BTO, but conceptually it's the same, right? Buy a BTO flat, okay, and it will come with huge amount of subsidy, and it's very affordable, right? Most Singaporeans can afford a BTO flat. So my first 1 or 2 apartments are all HDB flats, and the first one is a 4-room flat, and then we move to a 5-room flat. Okay, it doesn't cost that much that we can't afford. So as much as possible, I encourage everyone to look for BTO flat because the price is low. Okay, be humble about your renovation. Nowadays, I can't imagine when someone say, "Oh, I spent $100,000 on my HDB renovation." Siao, that kind of thing, right? So it's a the kind of money that if you put in at that age, you should let it compound, right? So to answer your question, if you buy a BTO flat, most Singaporeans can afford it. Try not to overstretch to, big apartments, things like that. Buying private property is a very expensive exercise. Okay, I don't believe in it. Now, I don't believe it doesn't mean that nobody makes money from it. But I think, number one, the risk is high. Number two, it takes money away from a risk-free compounding. Okay, and the third thing I want to say is that the returns rates from condominium and private landed properties, all this have tailspin down quite a lot. We are no longer as good as we used to be in the early 90s or early 2000.
Great answers. Do you have a strategy for young people if planning for their retirement now?
Okay, so maybe we go to the next slide. Okay, in terms of for young people. Okay, so the question really, now I've shared with everybody when you are in your early 20s. Okay, you should top up your special account as soon as possible. Right, max it out. Right? Stay humbly. Don't overdo a renovation whatsoever, but just max it out as quick as possible, and you will be in our journey. Now, some of you said, so Mr. Loo, you talk about 1965, but what's this 465 thing, right? So I remember my earlier slide was that right now at 48 years old, we have got $1.4 million. And by the way, I like to interject you. My previous show with Michelle was being criticized very heavily because I actually said I was a multi-millionaire, and someone said, yeah, you got $1.4 million in your CPF. How can you call it a multi-millionaire and things like that? Okay, first of all, I'm just saying that is the only part in the CPF. Okay, I didn't talk about my cash portion, but I think what I want to encourage everybody is that the path to reach there. Okay, so how much will our CPF be at 65 years old? It's a very difficult mathematics to calculate, and it took a long time to calculate out because it involves spreadsheet, and I look for a community of experts to help me to calculate the spreadsheet. And you know what? Next slide, please. Okay. If my wife and I continue to work, and we will work all the way to our retire if health permits, we will have $3.5 million by doing nothing. Okay, by doing nothing more than continue to work. Right. All our contribution to our ordinary account, special account, Medisave account, we assume they are uninvested, and we'll continue to have our monthly income, which will first $6,000. You will continue to have contribution in it. And I also assume that I would not increase my ordinary account investments into stocks and shares. We have $3.5 million. That's not bad, right? By just doing nothing, right? I think a lot of people won't be able to make that much money from their housing. Next slide, please. So now some people say, hey, Loo, you're gonna put money into your ordinary account that only earns you 2.5%. The kind of thing. So can we make it a little bit better, right? So wow, what if I gutsy right now? Some of y'all know that I love the S&P 500. If I take out everything from ordinary account and hum into my S&P 500 and assume that it grows at about 7% every year, what will the number be right now in my CPF? Next, please. The number will grow to a phenomenal $5 million. $5 million, okay? And after I came out with this concept, a lot of people give me a lot of other tips and tricks to grow even more, which I'll share two of them later. But you know what? I think to have the guts to throw every single dollar of ordinary account into S&P 500 takes quite a lot. So let's not assume that you'll do all, but you do some. Okay. So I think that, next slide, please. I think that $4 million by 65 is very achievable, because by doing nothing more, I already hit 3.5. Just stretch a little bit with some investment, right? We'll hit about $4 million. So I think for all young people, right? For all young people, I tell you right now, to be a multi-millionaire by the time you retire is a very achievable, okay? It's very achievable. So please, work as hard as possible, be wise with your money, be a little bit more thrifty, don't overstretch yourself, and you have a wonderful life waiting for you in later part of your life. Over to you, Michelle.
We have a question from Pei Ling, who wants to clarify, is 1.4 million the total for both you and your wife?
Yes, it is. Okay, yes, it is. And some of you said, So 4 million is also for 2%, right? So does it mean 1%, 2 million? The answer is no. Okay, the answer is no, because there is synergy. There's economic synergy in having 2% working towards a financial goal. For example, your house, right? Your house, if you 1% pay for a house, it's very kanko. It's very, very difficult. Now, once you have 2%, it's easier. Your expenditure, if your expenditure is spread across 2%, is a lot easier. So I encourage husband and wife to work together. Yes.
So does your wife still work? Does she contribute?
Yes, she does.
She does. Okay. And you still have your day job to contribute?
Yes.
Okay.
Yes. The answer is yes.
All right. So this is a question from Lily. What to do when both the SA, a special account, and your Medisave account are maxed out at 181,000 and 60,000? What should I do then? Okay.
First of all, it's a great achievement once you're able to do that. It's a great achievement. And Lily, I hope you achieve it when you are young. I've got in our 1165 Telegram group, which have 10,000 people, I have many people in their early 30s have achieved $181,000. I don't know how they do that. Because I didn't achieve that when I was in my early 30s. I only achieved 130,000. So if you have maxed out this one, the two things you can do: continue to work, okay, so that the salary contribution will continue to build on top of the $181,000. Okay, so two things can cause the $181,000 to be breached. Number one, your salary contribution. Number two is the interest that you get from your special account will go on top of your 181,000. Okay, and therefore there are many people right now with their special account way above $180,000. Right. For example, I've got $300,000 in my special account. Right. So, and that's because of that gap. I give you tonight for this show, I'm going to give a special hack. Okay. CPF may not like me to give this hack, but it's my show with Michelle, right? So the hack is that if you work if you work one job, the limit that you can put in your CPF every year is 37,740. 37,740. Okay, but that's per job. So if you got two jobs, okay, you can contribute 2 times 37,740. Okay, so therefore your CPF will actually increase much faster. Some of you say, my boss doesn't allow me to work two jobs. I understand, okay, but I'm giving you all the trick, and you're gonna figure out how you're gonna get two jobs. Okay.
Thank you so much. We love it. Look at Lily. Yeah, exclusive CPF hacks. We love it. Keep it coming, Lou. Is there a strategy for married couples with kids? Do you have a strategy for people in that situation?
I do. One of my slides, I don't know whether I'm jumping ahead. Maybe I'll hold that the question regarding to making millionaire out of babies. That's one of my hacks. Okay.
I love that. More to share on the topic.
Yes, I have a section on that. Okay. Maybe we go back to our presentation and so that we can speed up. Okay. Cool. Yes. Okay. So very quickly, what is necessary for Mr. and Mrs. Loo to hit 4M65? Number one, stay married and stay healthy. The word stay healthy right now has different meaning, okay, because of COVID. Stay healthy, continue to work, and at your later years, right? Maybe in your early 20s and late 20s or early 30s, it's kind of difficult to do that. But when you're in your late 30s and early 40s, try to use cash to pay for your property mortgages, okay? Because then you can put a lot of CPF, leave it untouched into your CPF and let it compound, okay? Next, please. Okay, this is where, Michelle, we are leading to, that for young parents, okay, when you have your baby, many of us do not know, right? All Singaporean kids, when the kids are born, actually have a CPF account, okay? Have a CPF account, and that's a wonderful thing, right? Your children have a CPF account at birth. And how do you make babies millionaires, right? Of course, you don't make them billionaires at one go, right? The frank truth is that if you put in $65,000 into their special account at birth, when they retire, they will have $1 million. Okay, they will have $1 million. Now, I shared this concept with some people. Someone said, Loo, you siao, no, young parents where got $65,000 to give their kids. That's true. Okay, I'm gonna appeal this to grandparents right now, okay, grandparents, okay, that when you have a grandchild just born, grandparents will do anything for the grandchild, okay. My father and mother, when my child was born, will do anything for them. The best gift you can give them is to put money into their special account, okay. And if you want them to become millionaires, put $65,000. Now, some of us said, but I prefer, this $65,000 is a lot of money. This is controversial. I think that when grandparents have a choice, of course, when it's time for you to move on from this life, you're going to have an inheritance, Instead of waiting for the day to come, put some of the inheritance that are meant for your grandchildren into their special account. So, in fact, if that multiplication power, the exponential power, compounding power will grow in such a way that you just need to put in little, they will have a lot. That's very powerful. For young parents, or you may not be able to put in, $65,000. You can put in $6,000 or $600, right? All this will go a long way to help them compound. So some of you ask, so how much should I put in? Now, some of y'all maybe say, oh, my kids already, way past baby age already. Oh, think of the magic number. I think the magic number is 60,000. Why? Because $60,000 gives you 5% return, not 4%, 5% return. And then above that, then the 4% comes in, okay? So over to you, Michelle.
I love that. Okay, how to make my baby a millionaire. Love that hack. We had a question from Darren who said, what do I do if I've already maxed out my special account and my Medisave account? What should I do with my OA? Should I pay off my housing loan one shot, or do I keep it there compounding?
Okay. So really, the question, I will talk a lot about the housing loan part, okay? And it really depends on also your life cycle, right? Now, there are two things you can do. Number one is you can explore getting a higher return from the stock market, okay? And I'm glad that you already maxed out SA and MA, okay? So you can explore getting a higher return from your ordinary account. And I'll talk a lot about it, but your ordinary account, you can invest in stock market and things like that. I love the S&P 500, okay? It has been proven over the last 100 years that it will always compound over a long period of time and give you a return of 7 to 11% return, okay? So I love to do that. Some of you say, I'm not familiar with the S&P 500 whatsoever. Whatever you do, don't go and invest in STI index, okay? It's called a super terrible index, okay? Second is that when you hit 55 years old, I'm going to introduce a wonderful CPF hack called 5455 maneuver. I'm going to come to that, okay, shortly, okay? So just hold your horses on this one.
All right. By the way, if you love what Mr. Loo is sharing with you, please show him some love and hit the like button so that he knows that you appreciate what he's sharing. So hit the like button. Everybody give us some love, okay? Loo, you mentioned you like the S&P 500, so you're using the CPF IS scheme to buy into an index fund? Is that how you're tapping the S&P 500?
Yes, okay. Now, to invest in the stock market, should we switch to the stock market experience I have?
Yeah, let's do it.
Okay, let's go. Okay, so let's not talk about the 5455 maneuver first. Okay, yeah, so we're a bit jumping ahead of the stock market. So maybe I'll give a flavor first, and then we come to the
then
stock
we'll
market.
get there
okay?
eventually. Yeah.
Correct. Yeah. So the S&P 5, sorry, the CPF OA under the CPF IS scheme has a lot of restrictions. You can't buy many types of stocks. But surprisingly, over the last over years, they have opened up. One company managed to get the CPF board to approve S&P 500 investment. Okay, the company is called Endowers. I'm not linked to them. I don't have any shares in them. I don't get a single cent of referral or commission from them. Okay, I know the founders. They are great people, but I'm not linked to them. They are the only company right now that you can invest the S&P 500 through. Okay, and the reason why is because they lower their fees so much that CPF allow it. Okay, and I love the S&P 500 because the S&P 500 compound. So I strongly encourage everybody to explore this option for your OA funds. Okay, now for some people say that, stock market is not for me. Well, there's always option of returning the money into your housing, and that's where we kind of lead into our 5455 maneuver.
Please take it away.
Thank you. Okay, next please. Okay, I'm seeing my big face right now. Okay, next please. Okay, so tonight will be the inaugural debut of my 5455 maneuver. Okay, I'm introducing concept. I thought of a long time for the terminology, the name, the nomenclature for this maneuver. I siungka basi. I like king until my brain want to burst, because I can't. If I don't come up with something easy to understand, many people may just give up. Okay, so the 5455 maneuver is simply two things you need to do when you reach your when you're reaching 55 years old. Number one, at 54 years old, you need to do this thing called CPF shielding. Okay, what CPF shielding is, I will explain in a short while. Okay, who are horses? And then after 55 years old, okay, there's a second thing you need to do is to create the ultimate 2.5% saving account. So just now we have handled, sorry, we're a bit too early. Okay, just now we have handled for young kids, a baby. Okay, a baby, you can make them millionaires. Young adults in your late 20s, early 30s, you can aim for 1M65. Somewhere when you reach middle age, you shoot for 4M65. Now you're at a crossroad of 55 years old. What should you do? This is what I want to share with you. Let's go to the next slide. Okay. A lot of people doesn't understand at 55 years old what on earth happened. I used to think that it's an education problem, but no. Very sophisticated, highly educated CEOs of listed company also asked me this question. So I came to the conclusion is that our CPF is too complicated. Okay. So let me share with you at 55 years old what happens. Okay, so I use myself as a case study. So let's say Mr. Loo at 55 years old. On the left side, at 54 years old, okay, what happens? At 54 years old, let's say my ordinary account had $200,000 and my special account is $181,000. Let's ignore Medisave account. Okay, the ordinary account makes 2.5% and the special account makes 4 to 6%, but generally 4% interest. Once I reach 55 years old, on the birthday itself, what happens? The $181,000 will be taken out from your special account to this thing called a retirement account. Okay, and the retirement account will also be at 4% interest, and it will compound all the way to 65, 70 years old to be given out to you in this annuity system called CPF Life, which tonight I'll not talk about it because it's very complicated as well. But generally, just need to understand this. At 55 years old, the government will take out $101,000 from a special account and tambai into your retirement account. Shift from left pocket to right pocket. Left pocket 4% interest, right pocket also 4% interest. So net on the left side, I make about $12,240 a year. When after 55 years old, I make now also $12,240. So I am neutral, okay, on both sides, all right? The shift doesn't hurt me financially. The interest I make is still the same. But someone, and I don't know who in their smart brain figured out this. I didn't figure out this, okay? Someone figured out this called CPF SA shielding. Now, what is it, okay? That makes you more money. Next slide, please. Okay, the CPF SA shielding maneuver goes this way. I've animated the slides. At 54 years old, I have 200,000 and my ordinary account, and my special account has $181,000. Before I hit my 55th birthday, maybe 1 month or a few weeks before I do that, next I buy a short-term bond fund, okay, and transfer my special account out into this bond fund, okay, and therefore I empty my special account and move it to 101,000. Now the actual intricacies is that you need to leave a bit of money left in a special account, but let's just ignore that for simple illustration. So I shift my entire sum of my special account out to a bond fund, okay, and then I happily wait for my birthday to happen, okay. And next on the right side, at 55 years old, the CPF board comes and check, okay. He said, oh, no, this guy has a zero in his special account. Okay. I cannot transfer anything from his special account to the retirement account. So I will go to the ordinary account, click, okay, and transfer $181,000 to my retirement account. This act of this way moves $181,000 from my ordinary account to my retirement account, and it increases the interest from 2.5% to 4%. Okay. Then I go and sell. After my birthday, I sell the short-term bond fund. The transaction fee is zero, and move it back to my retirement account. Beautiful. Next, please. Beautifully, the interest right now has got my special account full at $181,000, making 4%. My retirement account also makes 4%, and my interest increased from $12,000 to $15,000. Okay, so this is the SA shielding maneuver. So this is a 5-4 maneuver. So I got 5-4-5-5, right? This is the first 5-4-5-5 maneuver. Okay. Next slide. Let me introduce the next concept. Some of you all know this in bits and pieces, but let me crystallize it. The next 5-4-5-5 maneuver is this. I want to create the ultimate 2.5% saving account. Someone say, hey, Loo, no saving account right now in the bank now near kosong, one big fat zero, no zero interest. It's true. What happens at 55 years old? At 55 years old, Mr. and Mrs. Loo can withdraw all our CPF out that's above the full retirement sum of $181,000. So let's say I've got $1 million inside or $2 million inside. I can take out everything except $181,000. But something many people may not realize is that we are allowed to return up to the entire sum of money that we drawn out from a CPF for housing and accrued interest back to the CPF. Okay. Some people say, "Siao Loo, 55 years old is the time to take out money from a CPF. You go and put money back in it, you know." Let's listen. Okay. Next slide. Okay. This is what I suggest. So I went to check. Okay, me and my wife, we roughly utang the government about $500,000, okay, into our CPF account. We're taking about $500,000 from our CPF, and that includes the accrued interest. Now, take note, Loo here buys the HDB. Some of y'all buys private property. So what you owe the government, can be as high as up to $1 million, right? Which means that you can return and put back a lot of money. So in the Loo and Mrs. Loo case, we can put back $500,000. Supposing you have $1 million now, most of us say, wow, Loo, I got $500,000. Let's just hypothetically assume, right, that Loo and Mrs. Loo have $500,000 in our bank. You know how much interest is earning in the bank right now? Kosong, zero, big fat zero, okay? Or near zero. At 55 years old, after 55 years old, if I transfer the entire $500,000 into the ordinary account, which I can because I owe my CPF account $500,000, I transfer the entire sum in. The interest jumps from zero to 2.5%. How much do I make now from the $500,000? $12,500 a year. Okay. Some people say, Xiao, you can put money in your CPF account, cannot stuck there. No. Don't forget, I say already, at 55 years old, any amount above $181,000 I can take out. So this entire $500,000 that I just throw in, I can take out any time I want. Okay. In fact, using Pay now. Okay. So effectively, this is not even fixed D, this is savings account, total flexibility. I whack the entire $500,000 inside, I can take out anytime. It's riskless, okay? And therefore, I encourage everybody, the minute you hit 55 years old, don't be in a rush to take out money. It's the reverse you be thinking of. You should chunk and throw as much money in as possible and max your CPF. Some people say, wow, I don't know where got $500,000. Singaporeans are very good in saving, you'd be surprised how much money people have at 55 years old, because a lot of us at 55 years old don't dare invest anymore. We're holding a lot of cash. Don't be silly and put in a bank, hum it all inside, in the CPF ordinary account. So, ladies and gentlemen, next please. The 2-5-4-5-5 maneuver, okay, if I execute it at 55 years old, by the time I reach 65 years old, will make me and my wife $170,000 more. The best part is risk-free, no risk. Probably the only risk is, I know the government gonna voted out, some lousy political party came in and wipe out the entire CPF. Now, those kind of scenario might come. I cannot prevent the kind of scenario, but barring the kind of scenario, $170,000 extra, you want or don't want. Okay, so over to you, Michelle.
These are just absolutely terrific hacks. If I can just simplify it for people. So the first hack is, before you turn 55, buy a short-term bond fund, which and then when you sell it, the transaction fee is zero. You're positive about this? Yes,
there are some companies. I think Fund Supermart might be one of them, and there might be others as well. I assume Dollar Dex will compete with Fund Supermart, so it'll be near zero, if not zero. Okay.
So you want to drain your SA so that the money going to your retirement OA, which pays less interest, right? That's the first hack.
Yes.
And the other one involves using your ordinary account as your super saver, your ultimate piggy bank that pays you 2.5%. Now, how much money would you have to put in to get that 170,000 again?
In my case, my CPF account $500,000. So I've assumed $500,000. Now, the truth is, maybe some people don't have $1,000,000, maybe 100,000, 200,000. So, you just linearly factor out, that's how much you get. You will still be in tens of thousands of dollars for nothing.
And you can use that and withdraw as much as you want from it because you've turned 55, right? So the timing of this is important.
And of course, the assumption is that you already fill up your full retirement sum, which many Singaporeans by then would have filled up their full retirement sum.
Okay. Do you all have any questions? Send us your questions, given the two terrific hacks that you've just heard. If you have any questions, now is the time to send them in. So James wants to know, is after you turn 55, will any top-ups that you give to the CPF account essentially be split to 3 accounts?
Okay. So, again, you can, after 55 years old, it gets a lot more restrictive. There are 2 ways you can do. The answer is, if your special account is full, when I return back the CPF, the $500,000 I talk about, okay, it will go all in the ordinary account. You have a choice to bring up your retirement account from $181,000 all the way to $271,000. Okay, that's called the enhanced retirement sum, ERS. Okay, it's a lot of abbreviation and terminology, but you won't split 3 ways, but you will go in the ordinary account, but you can have the option of bringing it to your retirement account up to the limit of $271,000, and that will give you extra 4% return. Okay. So I think that will be answer the question.
Okay, so Faith wants to know, after I turn 55, can I still transfer my OA money to my SA to keep making that interest work for me?
I think the answer, that's a good question. You can transfer money to your, okay, so it depends. Okay, the answer is depends. The question is, have you filled up your special account to 181,000 on the first case? If the answer is yes, then there's nothing you can do to transfer anymore. But if you were a shortfall of the 181,000, I believe the answer is yes. Okay, I stand to be corrected. But if you, let's say I only have $50,000 in my special account, yes, the government will probably allow you to transfer all the way up to 181,000. Don't forget, you still have the answer is yes, but the amount that you fill up will likely go into a retirement account, which you can fill up all the way up to 271,000.
So you got to meet the minimum first in the
Yes.
retirement account.
Yes.
Right? Okay.
Yes.
We have several people joining us tonight who have done so well. They've used your method 5455 and they've maxed out their retirement account. They've maxed out their Medisave account. They want to know, can I maximize any more of my CPF account?
Okay, so I've already given almost all my hacks all away already. Okay, so the question right now is that, then really, you have formed if you belong to this category, you have formed a powerful retirement fund already. Very strong financial safety net. You're probably a bit too secure already. Okay, it's time for you to take some risks in the stock market. Okay, so my suggestion is for some of you who have filled up your special account, Medisave account, you don't need to wait until 55, by the way, to do this. Okay, in fact, you should try to do it early. Maybe I'll share with you some of my investment experience that I've done. Okay, so over to the slide, please. Okay. So this is very important. So some of you said, no, Loo, I want to know how much I will have in my CPF when I reach 55 years old. We have launched a CPF calculator in our Telegram channel. Okay, you can go to this Telegram channel, t.me Loo at 1M65. You'll be able to find a CPF predictor that's pinned on top. You can go in, key in your numbers, and you'll predict. Let's say you're 20 years old right now, or 30 years old. You'll predict how much you will get when you are 65. It's a powerful predictor developed by one of our volunteers. And I think everybody should try to join our Telegram channel to try this out. Okay, so go to our Telegram channel, Loo at 1M65. Next, please. So my story, and I'll do a little bit of show and tell right now. My story of 1M65 actually was discovered by Straits Times. I know Straits Times is behind the Money FM. And they showcased my story, and soon after another, more and more people start jumping on the bandwagon. Next slide, please. Okay, I've given many talks on 1M65 and 4M65, and tonight is a great night because this is my 88 talk. 88 talk, and I'm very glad that I'm doing it with Money FM. Okay, next, please. In 2018, I was very honored to be given a Public Sector Transformation Award. And this was in recognition of our 1M65 movement effort. Okay, this prize should go to the entire movement volunteers, right? We have got maybe, quite a lot of volunteers inside. They're helping and spreading the word and things like that. So this prize shouldn't be just mine alone, but it's to everybody. Next, please. Okay, I've written a lot of articles on financial well-being. Every month I'll probably write 1 or 2 articles, and I think everybody should try to read some of them. And for example, in 2019, I predicted a stock market crash will come. I didn't know how it will come, but I predicted that it will come, and in 2020 it did come, unfortunately, in a very painful way. And in April, when everybody is still in panic, I wrote a written article and say that, there will be a big bull run that will be coming. Very few people believe me. And for those people who believe me, they've made a lot of money by now. Okay, because the stock market, next please, okay, has run up. Okay, so please join us in our Telegram channel, and I also got a YouTube channel. Me and my daughter will have some very interesting, lively video. She's quite natural with this. I'm not. Please join us there. It's very exciting. We'll review a lot of our CPF and market prediction there and things like that. All right, next, please. Okay, so the question really, back to Michelle, your question, what should people do with their CPF? They're maxed out everything, right? The question really is, how does 1M65 help you with your stock investment? Okay, and I wanted to say this, that the formation of a huge financial safety net with 1M65, okay, actually helped me a lot in my stock market investment. Okay, and because I know I have a financial safety net there already, and I live my life very frugally, I've saved a lot of money. When the market crashes, I now could jump in without all this fear that most stock investors have. Okay, so I became a contrarian investor, meaning that when the market hamlok, I will be able to invest in. So in 2000, I usually say that I've been successful in three financial market crashes. 2008, 2008, we have the global financial crisis starting from Lehman Brothers crash. Second is that the Europe debt crisis in 2012, the China huge stock market crash of 2015 have drove the market down. I've profited on all of them. Okay, and you can use your ordinary account and invest in the S&P 500 or equivalent, and you will have profited from there if you have the guts to do so. But in year 2020 was the big one, right? Year 2020, the coronavirus one. Let's go to the next slide, please. I've used the STI index. Doesn't mean that I want you to invest in STI index, okay? But as an indication of these huge market movements, okay? And I'm glad to say that for myself, every time there's a market crash, I have the guts to go in, and really it doesn't require brains. It requires guts, and hell of guts to just go in. And this time around, for the 2020 financial market crash, I was very vocal. I tell everybody I'm going in right now. I'm going big. In 2015, so let's maybe backtrack a little bit. In 2008, in the global financial crisis, when the STI fell down to around the 1,900 level, I went in. Okay, I went in, and that time I was still younger and I didn't have that much money, but I went in quite a lot. But I held back a little bit because I'm a bit unsure. But I didn't have any fear. I was just a little bit unsure, getting used to it. Before I could throw in every single cent, the stock market has recovered, and I was like, I missed it. Fortunately, when Europe debt crisis came, this time around, I took out every single cent from my household, kids' ang pao money, everything, take out, right into it, okay? And then when the market rebounded, I make money, right? You see why I have the guts to do so is because I have 1M65. If I lose every single cent, I still have got 1M65 there waiting for me. It's nothing to fear. I still have $1 million waiting for me in retirement. So by the time China stock market crash come, I went in biggest ever. I threw in $1 million into a stock market, and I profited from it. Right, 2020 COVID crisis was the biggest jump I ever went in. Some big numbers inside. And why am I able to do so? And let me repeat again: you need a financial safety net to stabilize your emotions before you can do well in your stock market investment. Okay, and I urge everybody to look in your 1M65 properly, and then look into investment like S&P 500, because once you throw in S&P 500, it generally recovers very well. So next, please. Okay, so the U.S. stock market has now recovered from the lows of March and April, and it's now broke records after records after records. And so have Nasdaq. Now you can't buy the Nasdaq with our OA, but you can buy it with cash. And I think we should look at it holistically, that the CPF forms a financial safety net, an emotional stabilizer to help you invest your OA and your cash into it. Okay, so you should look at this holistically as a whole. I'm glad to say that many of the 1M65 community have made money from it. I'm very happy and very proud of them. Okay, so over to you, Michelle.
Okay, so the fundamental for the 1M65 is put as much money as you can in your SA, because it's going to earn you risk-free, inflation-beating 4%. And I think at times like this, it's important to note that even creditors cannot touch that money, right? If you go bankrupt.
Absolutely, you're right. Yeah, right. They can't touch your CPF.
All right. There's like this raging controversy in the comment section. People, and I checked with CPF, and I understand you can't transfer your OA to your SA if you are below 55, right?
That's not true.
You
That's
may
absolutely
transfer.
not true.
You may transfer if you are under 55, but you can't do it if you're older than 55.
You can't transfer to your SA, but you can transfer to your retirement account, which is a clone of the SA, remember?
Okay.
So don't forget, at 55 years old, your SA get ported over to your retirement account. So in short, your retirement account is the one that you can fill it up. So in effect, it's the same. You get 4% return. Yes. Yes. The only thing is that your retirement account will get this disbursed to you in your CPF Life.
Right. Got that. Okay, guys, this is your final chance to get your questions through to Lou. If you have any final moments to get your questions in, all right? Lou, I think it's important for people to understand as well if there are any trade-offs to moving your money to your special account from your OA.
One of the biggest trade-off is really a housing, okay? And housing. This thing, Singaporeans are fanatical, crazy about their housing, okay? And they want to stay in a condominium. They want to stay in a landed property. And in exchange for that, you forgo a powerful compounding machine that's in the CPF. So, and that is why I think, and they have so really it's very controversial. The question really is, should someone buy private property in order to hope that you will appreciate and make money? The answer is in my father generation and when I was young, the property prices were I use the word escalating, rapidly, and people leverage their property investment and therefore they make even more money. That's probably true, but something has happened over the last 10 years. Our property prices have tapered off, and they have now humbled down over the last 10 over years to a more humble level because our economic growth is no longer spectacular. We have reached a mature economy. The foreigners are not coming in droves anymore, so you don't have that many foreigners. Our rental market is terrible, pretty shitty, and therefore our property market is not that spectacular. Now there is a current property bull run right now. Okay, there is a current property bull run, but that's kind of COVID driven, right? And once the COVID crisis is over, and I hope that it'll be over soon with the vaccine coming out by many companies, we should see things going back to normal. Okay, so I'm just trying to say that between the property investment, okay, and a powerful compounding CPF engine, you got to pick one. Okay, the property engine, to my humble opinion, that powerful growth machine has come more or less to a slowdown, and more important is that it carries risk as well. On the other hand, your CPF is risk-free. Okay.
Okay, can everybody hear me? Gosh, I think that's a sign from the CPF powers that be that says, I think we've maxed Mr. Loo out. He's given us so much. James says it were best. I think, Lou, you've shared such amazing insights with us. Thank you very much. For those of you watching, please hit the like button if you appreciate what Lou has shared with us this evening. Lou, thank you for your time. I really appreciate it. Would you like to say your last words? Yeah, to our listeners.
Well, thank you for everybody. We have a 1M65 movement. I use word movement. I've never collected a single cent for all my talks or all my articles whatsoever, not 1 cent. And the reason why is that we want to start a movement so that everybody, after hearing what I've shared, please go and share it to other people. Okay, there's so much negativity, misconception of how to use CPF that is harming Singaporeans from a good retirement that we all deserve. So I strongly encourage everybody to dispel certain misconception, educate everyone so that as many Singaporeans as possible become millionaires or multi-millionaires.
Oh, you've really shared so much with us in the spirit of financial education, which is what this session is all about. We haven't paid Lou at all. He's shared his time and expertise. Lou, thank you so much. And thank you all for joining us. By the way, some terrific questions. We're going to give some of you prizes. We'll get in touch with you separately. Please tell us which topics we should discuss in our next session. You just fill up the feedback form. And before I get into that tour, hear me, I think I better bid adieu. Thank you so much, everybody, for joining us. Like and share this and watch all our previous Money Matters seminars and keep it on Singapore's most influential radio station, Money FM 89.3. Goodbye, everybody.
Thanks.